guys about what I think could potentially happen in the market on Mondays, and then go ahead and do that weekend review coming into Fridays. So we've got Apple up here on the screen, and you can see this was on my list today, and I had it as a potential short, right? So I said, hey, if it breaks below 284 right here, then look, it looks like it's going to be a potential short for the day. Let me go ahead. It takes a little bit of time with the delay to scroll in and out, just because I have everything running right here. So you can see I said, hey, you know, Apple had earnings, and maybe this is going to be a stock that's going to continue to the downside because it did drop down overnight with the earnings. The market took it down, and then they ripped it higher today. In fact, in the Java Pit trading room, where we call out everything live as it's progressing, was talking about, got in right here after we were, I was in a call right here after it broke the pivot and it was holding support. And then it went ahead and it continued up. And you can see all of these little levels here. We've got the Camarillas, we've got person's pivots, and hey, everyone, it did not stop on those. It continued like a freight train. And what was it? It was all those shorts that got in the beginning, hey, this is going to drop down. But if you actually got my list, if you guys sign up for my newsletter, you will get this list that you see here on the right, coming to you every morning by 9 o'clock. If you check out my channels in the morning, you'll see me building the list live, and you can ask questions as to why I picked that stock. So right here, you can see this green line. That was my, hey, if it breaks this support level of, resistance level of 288.50, this is going to have a potential move to the upside. And sure enough, what happened? It took those shorts for a nice ride. It took those shorts and it took them all the way up, tested the pivot once, came back, and then it continued through the pivot up. And these Camarillas and person's resistance didn't act as a roadblock until we got up to R2 up here. And then I saw, for whatever reason, this line is showing up differently here. Trading it earlier, we had the resistance line and it was right at 299. I called it out in the room. I said, hey guys, listen, watch the 299 level. Yes, it's right above R2, but it could be potentially a resistance because I see this trend line. I'm not sure where it came from. Well, sure enough, let me show you. Let me extend this chart for you guys and show you. It's going to take a second to maximize. It's just a lot of bandwidth of everything running right now. Helps actually if I click on it. There we go. So look at what happened. This was a trend line that I drew on the daily chart at the top of the candlesticks and wicks, right? Back in February, before we had the downward motion in the market, right? And what did it do? Look at where it did. Look at what it did. It came up and touched it. Exactly. Do you think that potentially there are computers and other people seeing these trend lines that are selling off at that same point? Now we're still up above that bullish above level, but we've gone down. Now we filled the gap, came back down, and potential sell-off here, right? Going into the end of earnings season, really, coming up a couple more weeks, not really the end of it. We're just beginning, actually. But we've got all this volume and a lot of the major stocks. I know I told you guys this on Monday, that when you are looking at the indexes, if you want to get into a short in the index, check out what's going on with the major stocks in those indexes, right? So we've got, let's pull up the SPY list. Like I said, it takes a little bit of time while we're streaming. So with the major indexes, know the big stocks that are going to really go ahead and move those indexes. For everybody that's watching here today, you guys are going to get a treat. I'm going to go over some of these, right? So Microsoft, Microsoft, just before earnings, we had a bunch of prints. Do you see those little lines? Where are those lines? What's going on? Where are we in comparison to those lines? I'll let you guys deduce what could potentially be happening here, right? We hit the top back here. I just happened to draw that trend line today. So I want to draw that as a line in the sand, just like with Apple. I want to see, hey, is this going to go ahead and continue to the downside from here? We came down, we touched this moving average down here. Let's go ahead and put a little target down there, 136, 40 points potentially to the downside. What was our time frame that it took us to reach that from the top last time? Let's go, actually, best way to do that is the ruler. So it took us 41 days, 41 trading days. Will it take another 41 trading days? We've had all the bears super hungry in the market to go ahead and jump in. They might have missed out on the first wave, right? And so we might be saying, hey, everything's going on. Yes, the economy is about to reopen slowly, but we've had this 6 to 8 weeks where the market was totally, not the market, excuse me, but the economy was stalled. So everything trades ahead of itself, right? So this could be, hey, this is the wave of when the market, of when the economy opens up. And then we could have the second wave of the virus hitting. And then all of a sudden, boom, we start to go down from here. So seeing that on Microsoft, today on Apple, right? You guys saw we came up, we touched this level right here. Well, we also had some prints up here, right? Let's go to our 5-minute chart. Let me pull this back to just a single chart. It'll probably make it faster for us. And if you guys have any questions at all, just go ahead and put them in the chat. I'd be happy to answer them. All right, so we had more prints right up here today. Coincidence that those are happening up at the top? Nothing super major that I saw come in, but smaller prints that are for an earnings day worth watching. When I say smaller, I'm talking like 65,000 shares, right? If you have 65,000 shares of a $300 stock, 65 times 300, oops, or times 1,000, we're talking $19.5 million position, right? So there was a $19.5 million position up here. Hey, great. Am I going to fight it? Am I going to go against that? Am I going to go long when we're below that 19.5 million position? I don't want to do that. No. So looking at all of that, Microsoft, Apple, what happened to Amazon, right? Amazon had a bit of a meltdown, right? You can see this wick right here that's showing 2474. Well, the high was 2475 yesterday, the all-time high for Amazon, and now it's pulling back. So we came back down to 2258. Could it go down from here? Let's look at our daily chart, right? If we want to talk about estimates again, okay, look, we were here, we were at all-time highs for Amazon, and it pulled back, right? Well, now let's do a little trend really quickly. Look at that. We happen to hit the trend line for Amazon, right? Right here. So could it rebound from here? Yeah, it could, for sure. For now, we're still above the moving averages. We had this major volume on this candlestick, and we're below that candlestick. And we had a gap. It's hard to see with this VWAP here. Let me turn off that VWAP. There you go, you can see it better. So we had that gap, we filled that gap to the downside, and now we've come down and we tested pretty much the low of this candle right here. So it might bounce back up to this green trend line. That was our trend line from right here. Might bounce back up, some more shorts might get into it, and then bring it on down. And when we look at Facebook too, when you start to see that all of the majors are pulling back, that they are pulling back with being at highs, with prints above, what could you possibly deduce that is happening? You guys, if you saw my first video, you saw that we saw prints happen at the top of the market back in February. We're starting to see more prints. Now, for now, we are below them. So we might be getting that bearish wave again. Right? We've got this gap. Facebook had earnings, gapped up. Let's do a quick trend line. We're hitting that trend line from above right now. So it's holding as resistance, right? If we break below that, we might have more selling power jumping in and really drop it down. Let's draw a secondary one here too. Right there. So if we break here, we might come back down and test this trend line down here, the 188, 187 range, and then it might go in between the two. We'll see. Let's do another one down here. So we might come and pull back and test, yep, 178 area. So I call that a rough target for now on Facebook. As long as the momentum is to the downside, we're starting to see accelerated volume coming in, right? We have less volume than yesterday. Yesterday was an earnings day. So are they going to take it back down, all the way back down here to this cluster of averages and bounce it back up? They might. So we might just see a pullback to 193. It might stall a little bit. But all of the signals that are happening at the moment, on Monday, I was feeling more bullish, right? We'd had prints, the momentum was there, we were moving to the upside, there was lots of shorts. Now, not as many people are shorting, there are more bulls, which leads me to believe that when we're having this higher volume, somebody is selling. And when we've had those prints that coincide with that selling, then it looks like potentially the big guys want to go ahead and take it down. Yes, the news might be saying, hey, the market's rebounded, everything is good, life is fine, we're going back to normal. It's a great time to get into the market, a great time to invest. You missed out on this past 35% move. You could have made that money. So why don't you just go ahead and buy? Well, that sort of thought process being fed into people's brains creates the buying demand for other people to sell. There's always somebody on the other side of the trade. You always have to think about that. Hey, is this a good time to get in? What is going on? Where are we in the chart, right? If you'd gotten in right here yesterday on Facebook, you're really far away from those moving averages. It's already squeezed. All of those shorts have already squeezed, and it could potentially pull back. So have that patience. Wait for that pullback, right? And what happened with Google? Google had a nice, massive run up as well on earnings, right? And do a quick line up here. You can see I had a little area of distribution up here. And then boom, as soon as we broke below that, came down. Look at where we're holding right here, right? This little black line is another former print level. Well, we went to it, we tested it, and now we're below it. Right? I actually haven't looked on the prints on Google. I got to do my research, see where we lie, see how much was up here. I mean, it looks like pretty massive volume, and we're below that volume. So those are the SPY holdings, right? The top 7 SPY holdings. Right now, we're below some activity. I also look at the inverse ETFs and like the leveraged ETFs, starting to get some prints on those too. So when everything starts to coincide, it's kind of like, hey, pay attention, open up your mind, open up your radar. Let's look at Intel, see where we are in Intel. All right, Intel, double top right here, right? And then we had massive volume when we came down. We had earnings, earnings right here. Had a little bit of a sell day, then opened down and bounced right off of that moving average. So if we get down and we get below this right here, I'm actually going to put that as a little alert. 56.17. You guys can do it too. Put an alert up. Massive volume candlestick. Right? Now, of course, the market can go either way. I could be reading it wrong. There's always going to be bulls on the other side, just like there could always be bears, but you've got to be nimble and be ready to flip. We are far extended on this QQQ and the SPY for the day. We're really far away from our moving averages. Would it be abnormal for it to contract a little bit like a rubber band? If you've ever looked at Bollinger Bands, right? Bollinger Bands, this is your 20 SMA in the middle, and then you go out like this, and you have the outliers. That's where you find the Bollinger Bands. So when it reaches one of those Bollinger Bands, it's natural for it to contract back in. It always wants to go back in because it's an outlier at that point. So when we look at the SPY for today on our daily chart, I know it's tough to see with everything, but right now we're a little bit far away from the moving averages. We came down, we touched the 15 EMA right here. I'm going to wait a second and let the chart catch up to me. Right? So when we came down, we touched this. 281.61 was the low of the day, and 281.26 is our 15 EMA. We might go down a little bit further, and we might go to the 21 EMA. Just moving it up so I can see. 21 EMA down here at 279.02, or the 280 might also be a target to aim for. But look, we've had higher volume the past 2 days at the top. Did you guys notice that higher volume at the top? It was ramping up as the price was going up. Is that normal to see volume going up as we're increasing? To me, no, because yes and no, because if it's squeezing, yes, you're going to have double that volume. Like today on Apple, probably insane volume. However, for the most part right now, we are below that massive volume. And so looking at this, we might close up by 285. That wouldn't surprise me if they go ahead and they take it up and they close it up by 285, right? And on the Qs, go ahead and look at it. You know, maybe put on a crazy lotto call on the SPY up at 285, or for 213.90, 214. You know, these are just my opinions. Take them with a grain of salt if you want, but they do perform over and over. So right now, we're still far away. We came up, we also hit this trend line right here and broke below it, and we're selling off from there, right? It could come down and be like the SPY. We might go ahead and have a move down further, a further leg down to 210.60, that 15 EMA right there. That might happen as well. So you could wear the bull hat and you can wear the bear hat, and then go ahead and trade the direction of the trend, right? Trade the direction. The trend is more your friend, because if you're bucking the trend, especially if you're trading options and it's been going down, if the IV starts to drop and the price starts to increase, then it's going to take much more of a move to go ahead and gain those profits on those options as well. All right, let's look really quickly at my list for today. Check it all out. I was really busy watching Apple and QQQ and SPY, so I didn't trade everything, but Boeing, right here, let's go on a 5-minute chart. So Boeing, I had a support level of 140.5 and 144.25, and that, you can see, broke right here. It broke in the first 15 minutes, and then it came back and went ahead and retested it. Let's turn on our Camarillas and our pivots. Right? So it came down, you can see, hit that Camarilla line, stopped, bounced up. All right, hit the 20 simple moving average, also happened to be my bearish or my support level to watch if it breaks below. Go ahead, you could have entered there after it touched it and it pulled back, right? And then you could have had that nice move down another $6 on Boeing. That's why on my list, yeah, it's a potential long and a potential short. People are like, oh, it did the exact opposite of what you said. Well, not really, because I give you levels to watch on both, right? And if you had in your head, hey, this is only going to go up today because it was up pre-market, you've got to change your thinking, right? You've got to change your thinking to what the chart is telling you. That's why, hey, if this chart is here and it's saying, all right, well, you know what, we couldn't stay above this level. There was too much resistance up here, and it's a good time. You could have potentially sold at the top when you saw that it did not break above and you did not hold that resistance as a support area. It did not flip to become support. Therefore, it's still a stronger resistance and it could break down further from there. Okay, we have a question from YouTube on 5-minute chart. Which EMA works better? You know what? I have a whole bunch of EMAs on my chart and SMAs. The pink one is the 4 and the purple one is the blue, right? Excuse me. The purple one is the 8 EMA. That was really weird. And so obviously the faster an EMA, like the lower the number, the faster and closer it will be to the price action. So the further away, the slower moving the exponential moving average or simple moving average for that matter. So that's why many times you'll see that a 200 SMA is much flatter than a 50 SMA or a 20 SMA. And many times there are computers that are programmed to act on certain exponential moving averages or certain simple moving averages. Like there might be one that says, hey, if it goes below the 5-minute 50 simple moving average, sell, you know? The reason why I have them all on and I have the Camarillas and I have the pivots is because there are computers programmed on different areas, right? So I look for it as a potential hurdle. You can see, hey, you didn't have this line on your chart. What are you looking at, right? Why did it stop in midair? The price there was 137.62. Right over here, 137.63. Now it makes sense, right? Why it stopped there. So when you start to, people look at my charts and they're like, Jane, it's so messy, but that's why I just have the black and the white. And I want to see where the price action is in relation to those moving averages and those resistance areas. If it's going to go ahead and stop, it's going to stop. So I keep that in mind. Like with Apple, I saw that trend line and I said, hey, watch out for this. And then it came back and it broke R2, I was out, right? Nice 460% profit on a lotto call. So you can't complain about that, right? Small risk, big reward. And if anybody wants to learn more about it, come on over to the training pit. We teach lots of people there all about the same concepts of really using small risk, large reward. So let's look at Zoom as well. You know, the market was bearish overall, so I wouldn't be surprised if most of these ended up being bearish trades today. But look at that. I flipped them. Look at that. I flipped and I put my resistance line as red and the bullish above line as green. I'll wait for a second as it catches up. But another prime example of looking at the chart, you can see, you know, in my newsletter, I do give you the charts as well with the lines drawn on them so you can see. Obviously, I don't have the price actions happening throughout the day, but I do give you what, look, I put it right here, 140, and it couldn't hold above it in those first 10 minutes. Could that have been a good short opportunity if it can't hold that line, right? And then it came down you could have had that trade in this sort of no trade zone back down to the support area, and you would have had a nice $6 move, right? If it can't break above and hold above, or if it can't break below and hold below, you could trade this zone in the middle. It's going to probably be a bit more choppy, but you could say, all right, well, it didn't hold above, so the rule of going long up there, or it's not going to go long from there, so I'm going to drop it down, right? I'm going to go ahead and I'm going to ride on the short down. Now, I also wanted to clarify something too. Not everybody is knowledgeable or really experienced in day trading or shorting. And when we go into a bearish market, it is good to know how to short a stock. So I'm just going to go over it really quickly for people that don't know what shorting is. I know when I first started day trading, it was like, what is this? You can make money when a stock is going down. So for those people that don't know, I'm not going to take anything for granted. And for those that do, please excuse this 2-minute interlude. So when you want to make money when a stock is dropping down, you have to have a margin account, meaning you have to have credit with your broker. You cannot do it in a cash account. So you have to have marginability. And then what happens is you would sell a stock. Yes, you do not own this stock. You are technically borrowing that stock on loan from your broker. So for example, say you had sold at 140 and you had 10 shares, right? So that's $1,400 that you would see plus $1,400 and negative 10 shares. Yeah. So you would have negative 10 shares of Zoom plus $1,400. Now, say it comes down to 136 or 130, we'll do 135, that's easier. Nice round number there. So in your head, you're like, I'm going to cover or I'm going to buy to close that short position at 135. So you could put your order in ahead of time. If it goes down there, great. You buy back your 10 shares. So now you have 0 shares, but you have the difference between the $1,400 and the $1,350, right? Yes. And so you've made $500, $50, excuse me. You had 10 shares. So you made $50 on the downside, closing out your position. So you make that difference. So I hope that helps everybody. All right. Let me just pull up. All right. So we have more questions on YouTube. Is MACD useful? And did you develop an intuition over time? I think the intuition comes with being able to just see patterns and understanding where the chart could go from this pattern. So knowing that when you have a certain pattern, you see a certain setup, also, and seeing on the chart that this is having a tough time right now with the resistance right here at this EMA. It held as resistance in the past. So seeing that, there's a computer that's set up to go ahead and sell there. I think a lot of it is also seeing patterns over and over and over again, right? As retail traders, we're trading more against computers. So we need to be emotionless. We need to look at the data and trade the data and the technical facts, as opposed to, hey, Apple had a great earnings. Why is it dropping? I need to get into this. I need to go long. Or saying, okay, well, the market doesn't like Apple's earnings. They dropped it down 5 points, so it can't go up. Right? Then when the shorts get stubborn, they can get squeezed, which also happened to Tesla. That happened on Tesla. MACD, I don't really use MACD too much. This is stochastics right here. And I just sort of threw this on just to see. I don't really use it that much. Most of the indicators as far as stochastics, MACD, RSI, I don't really use. It's more the price action and the volume and really seeing where that massive volume is on the chart, as well as where the prints are in relation to the price action, if that helps you. So another question, 15 or 30 EMA. You know what, I just recently put on the 30 EMA, but I will trade with a 5-minute, 45-minute, and daily chart, also 15-minute. So I'm constantly looking at different averages and looking at different areas. Like if we put this to a 45-minute chart, you'll see maybe there's another reason why. Look, hey, it sold off on the 45-minute chart at the 50 SMA. Oh, now it makes a little more sense why it stopped in midair up there, right? As opposed to that was just my line to go long, and now it's sold there. And we also had a Camarilla. So when you look at it on different time frames, and that's something else for newer traders, is try not to get pigeonholed into just having a particular time frame that you look at. Look at it on multiple time frames. You can see here too, it keeps using this trend line as a resistance. Excuse me, not a trend line, this simple moving average. So if the simple moving average, if you wanted to go long, you could potentially use that as your target. If you wanted to have a potential short entry, say you think it's going to sell off further, you could use that as your potential entry to get in, because you see, hey, every time it comes up, it sells off. And so it was here, sold off, sold off, sold off. And pay attention to the wicks too, right? Pay attention to the candlesticks. It comes in time as well for traders. It's not going to happen like this overnight. I know that this market has provided an opportunity for people that are at home to watch the market, to start studying, but best to really go ahead and do that studying first and go ahead and give it time, because the more time you practice, the better your trading is going to be. Mike, are we restricted on time today? Because I realized I've just been talking for half an hour and it's gone ahead, and it is, I don't want to cut anybody off. All right, so let's go ahead, let's look at Clorox too. So Clorox has all of these wipes, right? Everybody wants Clorox. Everybody wants to go ahead and decontaminate and sanitize everything, get rid of the virus. Well, Clorox had a nice bull move today, right? In the first 15 minutes, and then it pulled back like much of the market did too. And now it's broken that support. Hey, maybe if we break right here, 193, potentially a nice move down. Where did it find support? That 50 simple moving average on the 15, right? You can see here, bounced. All right, maybe it's going to bounce there again. No guarantees. There's no guarantees in trading, which is why you have to be nimble and ready to get in and out of profits quickly, right? So actually, I'm going to throw up Apple right here on the 5-minute chart, because I start to see Apple has a lot of volume building right now on a simple moving average. Oh, there goes Clorox. Somebody must have been. Okay, awesome. Thanks, Zach. All right, see, look, we've got volume that's coming in, right? This acted as support, this trend line, and right here. And so now, is this trend line going to be, excuse me, is this moving average going to be selling or buying, right? You can see here, look at the volume. It hit that trend line. Same trend line, has volume, right? Maybe this is going to be where we start to see shorts covering or going in. Now, I would watch it for about 5 minutes. If we go below that volume, we go below this candlestick right here. See the low of this candlestick, 288.68, put a little. And that also happens to be where my go long signal was. That might be potential move to the downside because we're below all of that volume, right? If you think about it, the volume is always what drives the price action. It's going to drive it up, it's going to drive it down. When you start to see major buying, that's going to be the demand that's going to increase the price action to the upside, and vice versa to the downside. So if we break below that major volume, do you want to fight that volume? Do you want to fight all of that money? No. Stay with it. Go with it. It's your friend, right? All right, I had two low floats on the watch list today, MDGS, which had a big run on it pre-market, and it looks like it just failed. But now you can see, hey, look, it's sort of consolidated right here. And It might be to the upside. It might be swinging up now. Might have a bit of a bull move coming. And I would watch for a test of that 383. Now let's check out SPI as well. All right, so SPI pretty much just never had the momentum to keep going. And right now there might be some short setting up. You can see where's that volume that came in. Check the volume at the bottom too. Don't just look at the price action. Read all of the chart. Becoming more and more. So we've already gone over Apple, Microsoft, and Amazon. So let's check American, right? So American downside move all day down to 1070. A nice 50-cent move, right? Broke down and came up to the 20 SMA again. You can see, hey, it pretty much tested the 20 right here, tested the 20 right here, and now it's found support. Look at how much volume was in these candles down here. So if we break below, you've got this big selling volume, it looks like right now, selling volume, because we had that massive candlestick. If we break below that volume right there, the low of 1075 could be a nice scalp to the downside, and I would look for further break below 1076. However, we could be setting up, yeah, I'll pull up BABA. So I'd watch to see, hey, is it going to break that trend line? It held support. So is that going to act as an area where people are going to come in? All right, let's look at BABA. All right, so BABA, nice trend. I really like looking at them on the 45-minute chart. Gives me that bigger picture view, right? Because I get to see what's happened. Where are we? This is obviously on my watch list back over here on the 22nd, and it looks like it's been a nice bear since. All right, so we are coming down. Let's also go ahead and look at it on the daily. Do we have anything on the daily? Right now, it looks like we're pretty far. Right now, it looks like it's pretty far extended away from our averages. It might have a bit of a move back up to that 198 area before it could go down. Just because it might have, you know, again, it's never straight up and it's never straight down. We had 1, 2 down days, but this is a massive gap down. So it might come back up for that 198 area and then continue back down to the downside. But many times you'll see 1, 2, 3 down days, an up day, 1, 2, 3 down days, and then it might go up. And then this one we had 4 in a row here, and then an up day came up to these moving averages, and then it came back down. And you can see yesterday it had bigger volume, was increasing, right? So yes, we've dropped below all that volume, but I would say it might go back up and test that 198.50 before it goes to the downside further. So for the day, if you're just looking at today, it's pretty far extended. It has a bit of support down here, right? It has support down here at 193, double bottom right there. And look, it's got big area of consolidation right here. My eye gets drawn to it. So I would look for it to break one way or the other here. So really a breakout above, because look at how long, let's see, 5, 10, 15, 20, 25, 30, 35, 40 minutes down here. It could be longer, but 193.50 for potential scalp to the upside. And then I would look even further down. I'd want this double bottom to break for 193 for potential move further to the downside. So that's my thoughts on BABA right now. All right, so if you guys have any other questions, you guys can always also email me, jane@thedarkpools.com or jane@cjanetrade.com. Happy to help you guys, happy to assist the market has enough money for all of us to prosper. And my mentality is we can all really work together. And that's what we do in the training pit and the Java pit, is work as a team to have everybody profit. There's no egos in there. Look at that. We're breaking out above right now. Let's see if it breaks this trend line. And we could have a good squeeze. Then maybe secondary test right here of the 193.90 area, right? 193.86. An alert there. Maybe a nice little scalp to the upside going into the close for those shorts, because it's likely that after having such a long drawdown on the day, that it could have a move to the upside into close, with shorts closing out for the weekend, not wanting to be short over the weekend as well. All right, so if you guys ever have any questions, again, I am accessible. Would love to help to see you guys profit. If you guys want to have my list, come and check out my newsletter, as well as check out my channel every morning, Monday through Friday when the market is open. I am setting it up live. You can see the different levels. You guys can ask me questions, and I'm happy to help assist you in locking in profits. All right, guys. So have a great weekend. I'll see you all on Monday at around 12:45, 12:30, and we'll go ahead and we'll do what could happen in the week ahead. All right, guys. Have a great weekend. See you next week.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.